Welcome to Wise Millennial. I'm Christian. Today I'm going to show you how I made my first $1,000 through investing. One, I'm going to be going into the dashboard of the app or the brokerage website, which is called Motif Investing, that I use for all of my investments on this particular account. I'm going to be showing you the raw data, basically where I started with how much money and where I am just a few years later. Now, the motivation behind this is not to give you investing advice or even to tell you who to go through to do your investing. I'm not trying to sell you to a particular broker. What I am doing is just trying to show you a real life example about how you can make some real money even on a low income like what I've been making over the past few years, which I'll share throughout the next few videos and in future videos as well. So I started off my first account on Motif Investing with just $300 as my starting balance, and I did this right after I graduated from my undergraduate university. I put those $300 in and started my investments from there. Now what you'll see here on my screen is that I'm going to share with you. So first I'll show you overall the positions and accounts. This is going to just give you a giant overview and just prove to you that I've actually made some real money from this. This is listing all the positions and balances for my account on Motif Investing, and it shows all the dollar amounts and number of shares I have in each of these particular stocks. And in the future I'll go into more detail about why I chose what stocks I did and what ETFs or index funds I have invested here. The main point here is that yes, I've made over $1,000 here. That's listed as $950, but this isn't accounting for a couple hundred extra bucks I made along the way that's not reflected here today. Now, I can also share the details about how I'm in those quick few hundred bucks later in the future, but for all intents and purposes here, I've clearly made that $1,000 that I advertised to you. Now we can go over here and click on my performance dashboard, and it's going to show you just kind of a timeline about how the dollar value in my account has changed over time. So according to my account here, I started on Tuesday, January 26th of 2016. I was 22 years old at the time and put in $300 just to get my account started. And the real motivation wasn't to get rich quick, especially not get rich quick, and not even really for retirement, even though that's kind of the way I'm thinking now, just a few years later. But the real motivation was just to get some money into into some stocks at all, and then start learning about the stock market and investing and how all of this works. And so my goal was simply to learn about the stock market, how to invest, and what types of options there are. And I figured the best way of learning how to invest was to just go and invest rather than spend hours and hours doing research and reading and that sort of thing. But you'll see that as I started with $300 and I kept that going for quite some number of months until July of the same year, and I put in another $500 that became available. You can see for each of these steps here in my timeline is another chunk that I invested. I generally invested no less than $300 at a time because Motif Investing and some other brokers usually have a minimum that you can buy with at any one moment. There's some penny investment type brokers like Acorns that you can also look at. But I went with something that's a little bit more traditional and gives me a little bit more control over the particular stocks I'm investing in because I wanted to get a lot of that learning. And you'll find that each of those brokers has a trade-off in ease of investment versus control. So the easier you're investing is generally you're not going to have as much control over the particular stocks you're buying, and hence I tend to think you learn a little bit less. But again, you've got a full-time job. You can't spend all your time researching what stocks to buy. So there's a trade-off in that regard. It really depends on the time and your interest. A year after starting investing, I had about $1,500 from various chunks of money that I put in, as well as some of the natural growth of those the dollars that I put in. And then I didn't really start upping the dollar amounts until 2018, and then especially toward the middle of 2019 when I put in I roughly doubled the amount in my account, just from available funds I had from working so much. You actually see that there's also a slight decline here. This actually isn't from a major downturn in the stock market or anything. This is when I sold off about $700 a stock for various reasons that we needed to pay for certain things. You can see in between these steps where I put in chunks of money that there's some natural growth. That's just the value of the stocks going up over time, especially toward the end of 2019 and into 2020. It's been going really strong. A more clear way of depicting the actual growth of what I put in rather than just the big discrete chunks of money that I put in is looking at the percent return. This is compounded daily, and so it kind of calculates if you had put all the money in at the beginning, how that would average out in terms of its growth over time. You can see that it had its ups and downs throughout the next year and a half or so, but it really started taking off in 2018, and even you'll find that one of the major things you have to start learning when you do investing is that you need to be able to stomach those ups and downs, and that if you get scared off by some sudden downturn, you're going to end up losing a lot of money and causing yourself a lot of trouble. And you'll see that in January of 2019, I actually basically lost all my gains up to that point, but I didn't quit. If I'd quit in January 2019, I would have made nothing. I would have walked away from the whole experience having nothing invested for my future. But instead I stuck with it, and sure enough, the market quickly recovered. Essentially, I've made all my gains just within the last year or so. But that's a big lesson to take away, is that you're going to have ups and downs in what you've invested, and you can't focus on the minutia of the day-to-day up increases and decreases in the value of your stocks. Really think of it as a long game, and that's really the game that I want to play, is that long game, and I'm really pushing toward retirement now with the way I invest. But in the beginning, it was just all about getting started. Obviously, in this account, I don't have a lot of money. I've since opened an IRA, which is just a more tax-efficient way of doing that investment. But this remains a good way to test out some of the ideas I have about investing, and generally serves as a good historical look back at how it all began for me. But you see that over this, say, about 3.5 years that I started investing in this account, my time-weighted return is over 53%, and average over 3.5 years, that's around 15% per year, which is pretty good for an investment. Is it the optimal? No, I now see that there are ways I could have maximized that profit even more, even just going with, say, standard ETF investments into something that approximates the S&P 500. I would have made even more, but nonetheless, over the past 3.5 years, I've learned quite a bit just from doing this, and I've made $1,000 as of 2020. Just start off with as small amounts of money as you can possibly put in. It's going to depend on the broker, as I mentioned. But what you're going to get from it is that you're going to learn how to invest wisely. You're going to learn not to be impulsive when you see ups and downs in the market, and you're going to learn to be patient. And really, the key is to form good investing habits. The best thing you can do is start investing regularly, setting aside money from your income to go specifically toward investments. So then I'll also just give you a brief look at kind of the breakdown of where I invested the money. So on this page, you can see the breakdown of where all the money that I've invested in over the past 3.5 years is in terms of the type of investment that it is. Most of the money that I put in is in US stocks, that's 44%. These are ones that I've more or less picked out in one way or another individually. And then there's 55% which are just into index funds, which I've basically gone straight into the S&P 500 every time with that. That's been really the preferred way of doing it. It's just less work, and it's a pretty safe bet historically. But then you can also look at how I've invested by sector, and here's just a nice visualization of how that's broken down. 56%, again, this is all of that index fund, so it's not really categorized accurately here. But you can see around 30% is in industrial goods, another 7% in basic materials, 1.45% in technology stocks, 3.6% in financials, and then there's another 0.5% in consumer goods, utilities another 0.5%, and services and a final 0.5%. And that makes up the total of my investments there. So that's how I made my first $1,000 through investing. It was not nearly as complicated as you might imagine if you haven't started. You just need to start putting money in, doing it regularly as much as possible, and going about your normal day. Of course, it's going to matter. The amount you're going to make or even lose is of course going to matter how the general market's doing, or depending on which particular stocks you pick. But you've got to get started now, because the best thing you have going for you when investing is time. Time is the best friend you can have. It's not tons of money, and it's not knowing which stocks to pick. It's having a lot of time from which you can recover from your mistakes, but also accrue value over time. Now, what I've shown here is not an amount of money that's going to make you rich. It's not going to form a significant part of your investment or retirement account for the long-term future, but what I'm showing here is a practical example of how you can realistically get started making some money through investing. It's not nearly as difficult as it sounds or pundits tend to make it seem. You've just got to get started with the basics. Pick a broker, compare them. We can do that in a future video for sure. I've got my ideas about that. And then just start putting money in and watching it grow. So that's it for today's episode on how I made $1,000 through getting started in investing. I hope to put out many more of these types of videos in the future, showing you generally how to save money, how to use your money wisely, and investment will be part of that. Again, I'm not an investment advisor. Don't take my advice as investment advice, of course. That should go without saying, but of course in this overly legal world, I have to say that kind of stuff. But take everything with a grain of salt and use your head when listening to pundits about where to put your money in. Look at some of the historical data. Some of the safest options are index funds, in my opinion, and that's what I've been more and more leaning toward with my money. And you can see that I didn't hide anything here on my screen, so you can see exactly what I've done, and I'm putting my money exactly where my mouth is today here on this video. So if you like this video, be sure to subscribe to my channel Wise Millennial, where we're helping you find common sense ways to live cheaper, smarter, and happier. I'll be glad to see you next time.